Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 109, Stocks for Beginners. Okay, welcome back to the show, and I want to thank all of you for tuning in. And before we dive in, I hope that all of you out there are staying safe and healthy during this horrible pandemic. Again, hope that you and your loved ones are still getting to do some of the things that you enjoy, and most importantly, that you're staying healthy and safe. For today's show, I wanted to rewind a little bit, and I wanted to talk about stocks for beginners. We use that term very loosely in the financial industry, and I wanted to explain how stocks work and why we use them in particular for our clients here at Falcon Wealth Advisors. So simply put, a stock is an ownership stake in a publicly traded company. So what happens is most all companies start out as private companies, right? Do you start up a deli or a bakery or a car lot or whatever it is that you want to do for business? And you grow it and you try to make money, you employ people, you offer obviously a product and a service, and you go out there and you try to grow your business. Well, what often happens as companies continue to grow is that they need an injection of capital. So they'll do what's called go public. And what that means is they'll initiate a public offering. And it's literally called an initial public offering, where they will file everything, open up their books, be very transparent on all of their business activity, and they'll put their shares out in the public market for people to buy. And in turn, these companies take that capital and they reinvest it back into their company. Or a lot of times they get very wealthy, right? Because they've diluted their ownership maybe, and you hear about these companies going public and the stock shoots up and everybody gets rich and that owned the stock beforehand or was part of the private company before it went public. And now they're making a ton of money, and hopefully they're using that money, again, a lot of it, to inject back into the business. Now, the reason that we invest in publicly traded stocks for our clients is, what else are you going to really do with your capital to grow it other than starting up your own business, right? So many times we work for a living, we receive wages. And unfortunately right now, with interest rates being so low, it's not like you can go down to your bank and buy a CD and make any type of return on that. If anyone's tried to buy a CD lately, you know what I'm talking about. Rates are very, very low as of the fall of 2020. And we expect them to continue to be low for some time. So why not take your money and go invest it in another company that's either going to pay you a dividend, which I'll get into here in a moment, or grow your money because the company is growing and becoming worth more money. See, the idea is if you just take all of your money and put it in your mattress, because you can't get a CD, or maybe you do get a CD, but they're paying you less than maybe 1%. Well, the issue is you're going to eventually have this very real risk of, it's called purchasing power, and it will erode. Because if everybody thinks of what a stamp cost 20, 30, 40 years ago, was a lot cheaper than it is today, and that's called inflation. So the cost of goods and services goes up, so you need your money to go up. And particularly for a retiree who that's what we specialize in at Falcon Wealth Advisors, is working with a lot of retirees. We need that capital to grow because they are no longer saving money. They're spending it. So we need to invest in companies that are either going to provide them an income stream through the form of a dividend or grow the value of their company. And so that's why we believe in buying stocks. Now, we don't only buy stocks, we also buy bonds and we trade options, and those are topics for other shows. But we buy stocks for two very important reasons. One, we want to grow our clients' capital. So again, if you invest in XYZ company, you own shares, and we're confident that CEO or that workforce is going to grow and they're going to grow their earnings and be worth more money, well, then you can cash in or sell your stock and have more money. Or what I alluded to already are dividends, which dividends are very important for the retiree. And what a dividend is it's typically a cash payment made out to the shareholders of the company for investing in it. So again, ABC company will say, hey, for you investing in our company, we're going to reward the shareholders and we're going to pay you 25 cents a share every quarter, or whatever it is, whatever they declare. Now, one important part that I wanted to bring up for today's show, again, this is a show about stocks for beginners, is a lot of people don't realize that when a company pays a dividend, the share price does go down by that dividend amount. So it's not just an immediate cash inflow and you've made that much money. What's very important about it, though, is that you didn't have to liquidate any shares. So if you own 100 shares, and you get paid $1 a year in dividends, well, you're going to get $100 a year in income without having to sell your shares. You still have 100 shares. And that's why retirees like dividends, because you just collect that income without having to buy or sell anything. All right. Okay. So that's what stocks are, right? And again, publicly traded company, you're out there, you're investing in that company with the hope that they're either going to pay you a nice dividend for doing that, or they're going to grow and grow and grow and become worth more. And one day you're going to cash in, you're going to sell that stock, make some money. Now, the nice and confusing part about stocks are there are many ways to go out there and get stock exposure. And many financial advisors will use products for their clients. So you'll come to the advisor and they say, okay, I'm going to put you in stocks, and they'll go out and they'll buy mutual funds or index funds, better known as exchange traded funds, or ETFs or annuities, right? All these different products out there. And sure, the products are invested in stocks. The issue we have at Falcon Wealth Advisors in using products for our clients is you're paying typically double the fee, not double, but you're paying 2 fees. So you have to pay a fee to the product to go buy you stocks, and then you're paying your advisor a fee. And we don't like that at all. And what happens is your returns typically will get watered down when you're paying an advisor fee and a product fee. And hopefully you understand that, and our clients certainly do, and they value that very much, that we're not using products. So with our clients, rather than use a mutual fund, we literally go direct to the stock market and buy them stocks. Some would argue that we're creating our own mutual fund. We're not, because you would have to file all that and do all the regulatory issues. But what we're doing is we're creating a diversified portfolio comprised of stocks, bonds, and options without using a third-party product. Now, I'm not saying these third-party vendors or products are bad. What I am suggesting, though, that we don't like is paying your advisor a fee on top of a product fee. That's very expensive to get stock exposure, and in our opinion, unnecessary. Now, I do want to caution you, though, if you're going out there and you're watching this video, or you're listening to this podcast, say, you know what, I want to go out there and try my luck at the stock market. I hear things are going crazy right now. Some stocks are way up, some are way down. And there's a lot of easy ways to do it now. They've made it very easy. Technology has really caught up, and you can do trades pretty much free on your own, and go out there and risk your capital. The issue I have with doing that, though, is if you're not on top of it and not watching it, you could lose your money. Because again, you're out there investing in a company, that company goes bankrupt, that risk is very much real. You could lose all of your money. And so while we don't claim to be rocket scientists at Falcon Wealth Advisors, what we do claim is that it is a full-time job. In fact, on my team, I have 2 investment analysts. That's all they do all day is research and trading for me and our clients, obviously for our clients. Again, I'm out there driving the decisions with Corey's input and some of our other team members, but our research and trading department, they're making the trades, they're following the rules, the parameters that we set for them, and they're doing this every single day full-time. Because if you go out there and you buy stocks and you got a day job, or you're retired and you want to play golf, or you want to travel hopefully one day, and you're not watching things and you're not looking at earnings reports and all of the quantitative and qualitative things that go into research, it can be very dangerous, right? So it's very important. If you're a do-it-yourselfer, I just caution you, you've got to spend time doing it. There are no shortcuts or easy way to do it. You've got to do the research. You've got to do the work. And that's what our clients hire us to do that for them. But they have confidence knowing we're not using any products, right? We're literally buying them stocks directly. I think the stock market's a wonderful thing. It's very fascinating. It changes every day. It feels like no 2 days are the same. We've got things that make sense and the market goes up, and things that make no sense and the market goes down, and vice versa. So again, it's very important that you have somebody watching your stocks, paying attention to it. They understand what they're looking at and managing it for you. And if you are doing it alone, I would encourage you to maybe consider using a product like a mutual fund or an index fund or something. But I would not want to pay an advisor a fee to do that, because you can go out there and do it on your own. Or certainly if you maybe want a one-time consultation from a financial advisor that uses products, say, hey, can I just pay you, a few $100 and you kind of tell me what good mutual funds or index funds are out there? That I could kind of get behind, but I do not see an ongoing fee for somebody to kick back and put you in an index fund. Makes no sense to me, or a mutual fund for that matter. So yes, things change, but again, you're paying two people fees and it just doesn't really add up to me. So that's what stocks are. Again, it's an ownership stake in a publicly traded company. There is very much real risk, but for that risk, you get opportunity to either grow your capital or potentially receive a nice dividend that can be a lot more than what you can earn in a savings account at a bank. As always, if you have any questions about stocks, bonds, or options, or if you want to talk about financial planning, which I would consider maybe even more important than stocks. Stocks are sexier. People want to talk about them. It excites people more. But certainly reach out to me. My email address is simply jake@falconwealthadvisors.com. You can also find me out there on all of the social media platforms like Instagram, Facebook, LinkedIn, and Twitter. And if you're watching this on YouTube, I really appreciate a thumbs up. Or if you're listening to this on your favorite podcast platform, thank you so much for tuning in. Be sure to subscribe on any platform. That way you do not miss another episode of Upticks. As far as fun things, again, more of the same in the Falcon household. Continue to do our landscape. So that's continue. Hopefully I get that done here and get some pictures out here for you guys. Our favorite pooch, Einstein, he's doing great. Against my initial thinking, we did get him neutered, which wasn't as bad as I thought. He bounced back really, really quickly. We got him neutered. We got his stomach incision, I guess, to his wall. I guess bigger dogs, they have a risk of their stomach twisting. So the vet kind of sold us on that. And then we got a microchip put in the little guy's back in case he ever gets lost, they can scan him. So the poor guy went through all that in one day. Very proud of him. He was a little loopy that night when we got him back, but the next day, back to his normal Einstein self, having a lot of fun playing, and seems to be in otherwise good health. So like I said in the beginning, I hope all of you guys out there are staying healthy and safe. Thank you so much for tuning in, and hope you have a great week.